Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Happy Monday morning for you. Of course, we had a fun broiler chicken session yesterday. I hope you got the opportunity to see that. Let's just make sure YouTube's doing its thing for you. Of course, we had a fun. It is cool. So, Mondays at TRI, actually, it's chock full. Sometimes we have like multiple analysts and commentators on the call. So you can see we actually started this video here today pretty late. We start the daily brief at 9 o'clock and we just finished it just a few minutes ago. I had an excellent report from our CTO, Sjord, and I got to tell you, the tools, the website's coming along so beautifully. You know, we got all these different sectors all pointed out. We can drill down and see what's going on. What the hell is the strongest currency? What a surprise. You know, they get a nice little reading on the, I don't even know if this is a China. Well, there you go. The Chinese currency's taking off like a rocket. Just a beautiful tool. So all this site's really coming together nicely here. So we had an excellent report from Sjord today on that. And also today we had Jamie coming out of the UK, our one of our fundamental analysts on the site. He likes to do a lot of fundamentals. Both top-down reports, what's going on macro picture-wise, and then bottom-up, some interesting stock ideas. In fact, one idea that he gave us today, I actually went and threw some bids in on the name while he was talking. And it was like, Brian, are you there? I'm like, nope, sorry, busy, talking to my broker. So, you know, I mean, that's what I love about TRI, and that's what I love about trading. You know, simply put, a good trade is a good trade is a good trade. You look at the numbers and you go, yep, that's pretty cheap. Yep, insiders are long. Yep, good analyst rating. Yep, good fundamentals, book value, cash, whatever, no debt. Pull up the chart and you go, gee whiz, sitting at the bottom of its range. Oh, here comes some bull divs. Oh, here comes W's. I mean, a good trade's a good trade is a good trade. So, you know, half of my job is to just try and get, you know, whatever audience decides to participate at TRI up to speed with the language. You know, what's a salad fork used for? What's the steak knife used for? That kind of stuff. And then turn you guys loose. And then, you know, they always say, if something is really yours, how does the saying go? If something is truly yours, let it free, and then if it comes back, it's yours forever. Jamie's probably a perfect analogy of that, where he likes coming back and contributing to the site, and he's just paying dividends. I mean, I didn't invest in him, but he invested in me to learn the school program. But easily, I've gotten whatever investment I've made in Jamie, I've gotten that tenfold out of him, karma-wise. And I think I've also said that half of my job is to make you people famous. And I think Jamie is well on his way. So it's a great report. Really cool stuff today. As I said, we also had Mondays, we have a report from our CTO, basically the architect of this entire platform, Sjord, and excellent update. We're humming along. He's super, super busy. And we have our goal of the new year to get this thing to the point where it's a marketable product. So I'm feeling super, super optimistic on that front. Data today that we can use, you know, what I would just simply say, if you see a breadth indicator like this, that looks like this is cautionary. Be careful. Broader market's actually rolled over here, but we're not really, quote unquote, overbought. So it's really dangerous level here. You know, new people coming in here just buying the stock market. It's not really like you're buying a cheap market. At the same time, too, those coming in on the short side, we're not really overbought. Could we have a spike up and run a whole bunch of stops just to piss everybody off? Yep, that definitely is the case as well. So, this is dangerous little part of the market we're in right now. Also, too, of course, you've heard me squawking about all these crazy celestial events, and now we're finally coming into the big apex event, Jupiter, Saturn, Cross. So we were looking at things like Bitcoin charts and stuff, and you can see it in the chart. The market is just jerky all over the place. I mean, does it really make sense for major stock indexes to go up like 10, 15% in 1 month? I mean, that alone, we all know the historical average rate of return for equities is about 7 to 8%. Couple that with a historical average dividend of somewhere between 3 to 4%, maybe 2 on the light side, 4% on the upside, the heavy side. The historical rate of return, total return for equities, is about somewhere around 11% a year. So if you see a stock market go up 11% in 1 month, it's not necessarily like, oh my God, that's a trade, but that's writing on the walls. You should all look at the market and go, maybe this is getting a little ridiculous. Who knows if you will or not, but that's basically my attitude right now. Don't chase. It's not worth it, man. This is your money. I mean, try and be a cheap ass like Brian. Go ahead and buy the bottom end of ranges when this shit goes on sale and nobody wants it. Cheap ass for the win. All right, so that's sort of my broader market commentary here. Be careful. Your little matrix that we like to follow and commentate on here for this free video. I like to just do this nice, simple sort of 4 or 5 market matrix. US dollar here, hegemony. I still think that this thing's trying to find some sort of major pivot through this Jupiter-Saturn cross event. Dumped hard into the end of last week. It's interesting how the market getting a little bit skittish on the risk side here. I saw the corn came off a good chunk here about an hour or so ago. US dollar index caught a bit of a bid here. Doji-ish bars, Joby gap potential here today. We're at, or probably not at, but very close to this really simple kind of thinking. I can't remember how I drew the original ABC off of this. I think it was one of my funny little, you see, and it's just one sort of market commentator talking to another. I often see this funny pattern. No idea what the name of it is, but you've seen me draw it before, where you get sort of like a flaring sort of, then you get this channel, and then you get a flaring on the other side. I still think that that's what's going on here. So with that said, I did go and buy some like leap options on this, looking for bull on the other side of this calendar year. And I might even go buy another one. Mind you, the price of them isn't coming off as much as I kind of hoped. I think Kevin said he went and bought one of the options that I was in. He paid like 35 cents, and I paid 40 cents for mine. So I was kind of hoping that the next buy I would do would be down in like the 20s, but we'll see how it goes. It doesn't really matter. Point here is, there is no quote-unquote bottom here right now. And my hunch is, as the politicians are humming and hawing about new emergency stimulus measures and floating more debt and stuff like that, we're going to try and swim and find some sort of bottom in here. And actually, I don't know whether, I think it might have been you, Kevin, or maybe it was, who was it? Might have been, no, I guess it wasn't from you. But on the site, we were having some fun digging apart both this gentleman. I think if you really want to understand the banking system, I really like this gentleman. He's kind of flip. He's going to make fun of the millennials. He's you can see. I mean, he's a bit older. He's probably my generation. But I think he does a very, very good job of explaining complex macroeconomic issues like how the banking system works in plain language. So I encourage people to watch this gentleman's offerings. And also, too, we were watching another video stream, which I thought was really good, very educational, on, geez, I can't remember where the hell I put that. Might be, if I'm lucky, we might just be able to see it in the history. So, do yourself a favor, watch him. And then also too, this guy. There we are. This is Kavarkinator's favorite analyst, right? Kavarki, I think you like him. And I'm just joking. I don't know, Kevin, whether you like him or not, I don't know. But somebody was telling me this guy here. Yeah, okay. Was that you? I can't remember. I think it was you that sent me this guy. I can't remember. Somebody sent me this video to watch. Anyway, it's interesting listening to him. And again, this is extremely complicated macro stuff. Probably 90%, 95% of the audience, probably not even the slightest bit interested in this stuff. But it's interesting how he's making the argument, because it's the same argument that I make. Is that I am a US dollar bull. And even though it seems like it's a crisis and it's chaos and they've lost control and things are absolutely chaotic, I actually think the US Federal Reserve Board is in a very, very powerful position right now. They are the world hegemony. Nobody's going to go put their fucking money in Chinese yuan or Russian rubles and trust any of those crooks. So, as a result, it's just really a question of how do they finesse their way through this crisis and just get to the other side. And I do find it fascinating. This gentleman, a little bit, he's a bond bull, and it's kind of funny because I've been sort of, the bond market, we'll look at it in a bit. And he even said in his videos, I'm taking a lot of heat on these kind of comments lately. But I really do like his comments on the idea that the Federal Reserve is doing nothing more than converting 30-year bond IOUs into currency IOUs. It's basically the same thing. So if you're really worried about the U.S. Monetary system and the debt markets, this is this whole idea that the Fed is, quote-unquote, monetizing the debt. They're, in essence, turning 30-year bonds into cash right now. As a result, he makes the argument that bonds and interest rates and stuff like that, interest rates are going to remain low. I don't really expect interest rates to crash higher here, but I think they're going to start trending higher here over the next few years. But he's making the argument that there's deflation everywhere. And he doesn't quite understand why the U.S. dollar is going down as hard as it is right now. I would make the argument that it has everything to do with the Jupiter-Saturn cross. The 1%, the higher-ups, they know all this shit. All these central banker people, they follow this stuff. Remember J.P. Morgan? Millionaires don't respect astrology, billionaires do. Trust me, all these central bankers. Fucking Christine Lagarde, like a year or two ago, came out in a speech and started talking numerology to the audience. Like, it was just like, well, don't you understand numerology? It was like, so trust me, all these higher-ups, they know this shit. And I would make the argument that they see this Jupiter-Saturn cross as a very big pivotal event in these massive cycles. And so I would argue that that's why the U.S. dollar is doing what it is in through this cycle. But if you understand the basic fundamental economics behind this, I think it makes a lot of sense, his argument that this is a massive deflationary spiral, which of course is U.S. dollar bullish. Oh boy, there's an economics 101 class for you. What? And as I said, probably most of you haven't the slightest bit of interest in what I just said there. You're just like, okay, Bitcoin when Bitcoin moon. Okay, moving on. Risk is looking a little interesting here. Risk is getting, in my opinion, very risky. But it's interesting, you see our little small caps, they're still bidding up the junior part of the market. There is a bit of risk appetite, but the senior stocks and senior issues, it just feels to me like they're very tired. A really good analogy of this, of course, is the corn. If this was a strong continuation market, these bots would have just come in and, of course, buyers would have stepped up and pushed the price up. But you can see every time this thing seems to get going, bang, a new triple top knocks it back down. Then, coming into the New York opening session here this morning, bang, another triple top came in here. So somebody is clearly selling into strength here. If anything, this is a fantastic analogy of a trader's life. I mean, if you are a bull and you say, I've got bot in my trading plan, I trade bots. Well, I don't know when you bought this. Maybe you bought this little reversal down here. Maybe you bought this level. Hell, maybe you bought this level. And you're sitting here and basically the market's sitting just basically where you put the trade on. There's nothing to do here right now. It's painful. It's boring. Blah, 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 blah. But, that's a trader's life. And I was really trying to convey that to the audience this morning, especially on the site, especially through all this fucking celestial cross and insane politics and stuff. Our job is not to have opinions. You really want to make money from trading? Put your opinion away. It doesn't mean anything. It's useless. I mean, this market might go up. This market might go down. It could do any old damn thing it's going to do. The only way you're going to make money from trading is you have to build a plan, identify the reasons that get you to act, and then when those reasons come in, you act. Without reservation, without hesitation, you just act, and you just follow your plan. Ideally, your setup works more than 2 out of 3 times. And, of course, when it does work, you get paid relative to when you're wrong. I mean, that's the whole fucking secret to trading. Right there, in about 1 or 2 sentences. You want to rewind the video, press pause, get your pen and paper out, and write out exactly every word that I did. You save yourself a lot of headache. It's just that simple. Anyway, blah, 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 blah. Broader stock market, crypto, the oil market, they're all just sitting right up there, just parked. And, of course, I wouldn't have any reason to do anything here. If I was trading, and I'm not really trading that much, not really that active, lower time frame trade setup-wise these days. I'm just sitting there just twiddling my thumbs. As I said, Jamie came on the site today, did a fantastic presentation, fundamental. Hey, look at this idea, look at this name, look at this industry, look at the growth rates, look at the structure of the company, look at the balance sheet. I think this is a half-decent idea. Sold! That's the kind of guy I am. When I look at this stuff, there's no fucking way I'm going to step up and pay like $19,000 for a Bitcoin. That's crazy. But, hey, if you like hanging out in elevators with hot chicks and little bald 20-year-old thin guys who are total sex gods now, okay, go buy your Bitcoins at $19,000. It's up to you. As I was talking about from that bond market guy, he was saying, I'm a bond bull, I'm a bond bull, I'm a bond bull. And I just got some nasty sell signals. Huge outside downside reversal. Huge outside downside reversal. So, through the past week, it was kind of like, oh boy, that's a tough sell. I don't know whether I'm bullish, but I suppose one might argue, we have this high and then this low, counter trend rally. So that to me looks like the top end of the trading range. If that's the bottom end of the trading range, we haven't actually gone through that low yet. So what am I trying to say here? Maybe against these lows, especially if we see the stock market top out and roll over. Maybe this triangle just continues to consolidate here. I'll tell you, it's awfully tough for me to take long setups in the face of that, though. Gee whiz, that's tough. So good luck, Mr. Bond King. It's not probably something I'd be interested in. But I don't know. It's just consolidating. That's about all I can say here. Is like as I said a moment ago. I mean, if you were a trader, trader gotta trade. You might have been like on the hourly chart, especially bond traders. They love this. The TA that we teach. I mean, basically, it was created in the bond market for these guys. So, there's the top end of the range. And what a surprise. There's Kavarkinator's level 88.6. And look at that, right? So, I mean, if you're trading this stuff, okay. I mean, I like that short coming in off of there. I suppose, on the flip side, we just turn this around. As I said there a moment ago, the traders, they might come in on the long side down here. Especially, like I said, if the stock market starts breaking apart. What a surprise. 61.8 to 78.6. We call that the reload zone. And you can see, lo and behold, look at the cute little W that came in here. So, I suppose I can argue that, from a trader's perspective, it's kind of cliche. But again, it's probably something I wouldn't be really that interested in right now. We were kind of humming and hawing about gold on the site today. Obviously, lots of people interested in the gold market on TRI. I don't think that should surprise anybody. We had kind of talked about this recently, how it kind of looked like there's some pretty big gaps on things like the gold charts up top here. There's one gold stock. In fact, actually, Sjord liked talking about this, or somebody was interested in this stock because, where the hell did I put it? AEM. Nice and diversified. They're in, politically correct environments. I like to use this as my nice proxy on sort of what the senior gold industry is sort of feeling. You can see the downtrend. Mountain Man, Gap, POC. This is where probably everybody's long. So if we can get back into that kind of window, you'll probably find all the people that bought the story will want to hop off here. And then, of course, anybody who actually did short this top, that's where they want to defend the shorts. So that's what I'm kind of thinking here over the short term. And it was interesting listening to guys like Johnny Hoagland this morning, who's basically a day trader in the markets. And he was talking in the Top Step video this morning that on the gold chart itself, he saw a nice little bull flag, and he was going to be playing continuation trades higher. So, anybody who's interested in bull flags, right? You just take whatever the rally is. Then the little consolidation, you might even call that, I don't know whether you call that a flag or a pennant. But something along like that, boobity-boo, so that gives you a target up in there. What do you think the odds are that that's probably a 50% retracement of that range? So traders, they love using the 50% rule to take profits. So, basically the market's telegraphing you that it wants to get up into this 75 area. So that's the same sort of thing that I see in the gold market. Interestingly enough, the market that really looks interesting here is silver. I think it was EIX. Was that what it was? No. Oh, damn it. I can't remember the name. It was Endeavor Silver. What does that say? EXK? Hey, there it is. So there's a U.S. stock. I think there's also a Canadian issue. But some people on the site were getting kind of interested in this. It's not bad. Setups are setting up. So 33%, you've got one low, two lows. Trying to put in an outside upside key reversal here today. So believe it or not, actually, and also too as a commentary on the economy. Like I get the impression that this fear cycle, it's over. We actually have to start getting ready for the next greed cycle, which means we have to start getting ready for the economy to start growing, which means we actually have to start getting ready for silver to start outperforming gold. Because silver is a really good proxy for sort of industrial demand. And you tell me, that looks kind of interesting there, eh? The cool part about what we do at TRI is that, we're not reinventing the wheel. All we do is just rinse and repeat, same old shit, day in, day out. So, if you are interested in playing the metals market to the long side, this is something that, if I got a nice little consolidation in here, I might actually set up a tradable trade. At the same time, too, my thoughts on the commodity cycle. So I'm not really a big fan of investing in the commodities right now. I would consider these more just sort of like trades. And you saw that silver chart. There's probably some money to be made there. Small caps still kicking ass. Maybe that's another sort of commentary on that endeavor. Bitcoin, like I said there a moment ago, feels like risk is feeling awfully heavy here. Maybe we have to just calm down a bit. Be interesting to see whether this bot level is taken out, but you can see there's a bit of room here for this price to move back here. Not in a big hurry here whatsoever. And basically the same thing on crap coins. We've rallied back up into a reload short zone, so not a big surprise to see some heaviness there. Could we take maybe like a week or so and let risk just settle down here a little bit? Maybe. Wouldn't be a terrible idea. And then, As I said, Jupiter Saturn cross coming up at the end of December. December 23rd is the event. Maybe we do something just as simple as, like that. That wouldn't surprise me. So, all right, there's your offering for today. Sure hope you enjoyed that. Maybe pop on the site, take advantage of that 30-day trial to listen to what Jamie had to say today. And also Sjord too. Tell you, man, TRI, the huge community. Now we actually have a fucking kick-ass website. Way to go, Sjord. The school program is time-tested. The principles work. It's just teaching you the process. If you want to learn how to do this and make some fucking killer money, the invitation's just sitting there. It's up to you. PMA for the win. All the best. And the only thing left for Brian to say here is bye for now.